Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Thanks for joining us on Money FM 89.3 with the bigger picture with me, Ryan Huang. And we are looking at Asia Pacific markets opening pretty subdued so far, tracking Wall Street's sell-off overnight after President Donald Trump doubled down on his pressure campaign on Federal Reserve Chairman Jerome Powell. So lots of things to worry about, especially with the tariff tensions in the backdrop. And in the mix also, some encouraging data perhaps coming through from China, where GDP numbers beat estimates. So what do we make of all this as we head into the coming quarters? Let's check in now with Vasu Menon. He is the Managing Director for Investment Strategy for OCBC Bank. Vasu, good morning. How is your week going so far?
Good morning, Ryan. It's been a fairly tumultuous week. The past week and this week, as we all know. But also interesting, makes the job a bit more spicy.
Yeah, it does. Keep you on your toes. All right, let's talk about what's keeping us on our toes these days, especially in the overnight action. We have President Donald Trump. He has been talking about Fed Chair Jerome Powell not being fit for the job, hinting that he might sack Jerome Powell. Walk us through the scenarios here. How much should we worry about these things?
Well, clearly we need to take Trump seriously. We can't write him off completely. But the good news is that, the law doesn't allow Trump to sack Powell just like that. Because under the 1913 Federal Reserve Act, the U.S. President of Congress does not have the legal authority to dismiss the Fed Chair before the end of his term. And there's also a Supreme Court precedent from 1935, where in 1935, President Roosevelt had tried to fire the commissioner of the Federal Trade Commission, but that was blocked by the Supreme Court. So in other words, the Supreme Court is saying that, the U.S. government has no right to fire independent, workers in independent federal agencies, including the Federal Reserve. And nobody has tried to remove the Federal Reserve Chairman so far. But, nevertheless, Trump is now challenging the 1935 president in court. He's filed an emergency petition asking the Supreme Court to rule in his favor so that he can remove two independent federal agency chair people. Now, the court has actually said that, has given him the authority to keep them away from their jobs for now while they evaluate this. But now, if he wins the case, the bad news is that, he could then take this precedence and, go after Powell. But what is going to stop Trump, I feel, is eventually the markets. Because we all know that if Powell is removed, the markets will be badly impacted. And Trump's advisors, like Scott Bessent, and other advisors have warned him, not to remove Powell, to let him complete his term, because they understand the seriousness of this. And, I think Trump will probably heed the advice, because we've seen what happened with the reciprocal tariffs on 2nd April. He implemented them, and then the markets went into a bit of a tailspin, and Trump backtracked. So I think what will stop Trump eventually is the markets, and his advisors telling him that he has to slow down and not do what remove Powell, because that could actually hurt the markets and the U.S. quite badly.
Yeah, talking about heeding advice, is there a point, or at least something to consider with what Donald Trump is arguing, that the economy will slow unless rates go down, and Donald Trump wants them to be lowered immediately? Is there some valid point that he's making that, with the economy going through a rough patch, you need lower rates to help improve where things are right now?
Well, not completely wrong. The Fed has cut rates 3 times so far by 100 basis points. It has not cut rates so far this year. But if you listen to Powell, he's also a voice of reason, because he's not against cutting rates. He's just saying that, what Trump is doing right now with the tariff on the tariff front could fuel inflation in the U.S. and cause prices to go up. And the uncertainty could hurt consumer sentiment, business sentiment, hurt the economy. So he's essentially saying that, some of the problem emanates from Trump. And this is something that Trump finds difficult to digest and is unhappy about, which is why he's also going after Powell. So Powell's argument is that, I'm not going to jump the gun. I've got to wait and watch and get better clarity to see whether what Trump is doing is going to anchor long-term inflation expectations. So, Powell is a voice of reason. He's not saying he's not going to cut rates, just saying that he wants to wait and watch and be sure that, what is happening in the short term as far as inflation is concerned, because inflation expectations in the short term have gone up significantly, does not result in long-term inflation expectations getting anchored as well. So I can see where Powell is coming from. But at the same time, Trump is in a hurry and perhaps, something that he's even looking for a scapegoat to blame for the slowdown of the economy because of his tariffs.
Yeah, so there's some pushback on that front and also some pushback when it comes to those tariffs. In fact, California is suing the federal government over Donald Trump's plans to implement tariffs, which, of course, have now gone through many iterations. The latest, of course, escalating against China. Walk us through what's going on here and what is likely to happen down the road with the escalation against China.
Well, so California, as you said, is actually filed a lawsuit on April 16 seeking to block Trump's tariffs, accusing him of abusing his powers and inflicting financial harm to the Californian state as well as the national economy. Okay, and California's position is that, the White House and Donald Trump has no authority to unilaterally impose tariffs, and only Congress has the authority to impose tariffs, and not the president. Now, California state is actually controlled by the Democrats, and it is not a small state. It's actually the biggest state in the U.S., the biggest economy in the U.S., and the fifth biggest economy in the world, Ryan. 40 million people there. They are big exporters, importers. Two-way trade is about $635 billion. And what they're trying to do is protect their jobs in the agriculture sector, the tech sector, the manufacturing sector. And if they succeed in getting the courts to block Trump's tariffs, then, this becomes a template. Other states in the U.S. could follow suit, and that will then slow down the pace of, tariff implementation and provide some relief for the markets. Now, as far as China is concerned, the tit for tat goes on. It's been building up quite a bit. But I think the good news is this as well, and it's a bit of a head-scratcher. Over the weekend, Trump was quoted in the papers saying that, Chinese officials have approached him to talk about a deal. When asked whether these Chinese officials have been sanctioned by Xi Jinping, he said they did not say so, but, he would guess that they are sanctioned by Xi Jinping. So he seems optimistic that a deal will be struck. Whether this is real or otherwise, it clearly shows you that Trump wants to strike a deal because China is a major trading partner. And, with China implementing substantial tariffs on the U.S. as well, the cost of many Chinese goods in the U.S. will increase significantly. So I think eventually Trump knows that he has to strike a deal with China. It's about saving face, and this may take a while, but, we may eventually get there, and that will be the biggest positive of the markets.
Yeah, Vasu, just to wrap things up, when it comes to China, how are you approaching markets there right now when you look at some of the data coming through? First quarter GDP last week beat expectations, and then you have Donald Trump seemingly looking to dial back to some extent.
You're right. I mean, the first quarter GDP growth numbers were strong, 5.4%, higher than Beijing's 5% growth target, right? And quarter on quarter as well, the economy grew at a fairly strong 1.2%. So it clearly shows you that, China's efforts at boosting its economy through fiscal stimulus and other measures are actually working to some extent, right? So the data for manufacturing, retail sales, industrial production for the month of March were all pretty strong. But at the same time, part of this boost is also coming from front-loading of shipments ahead of the U.S. tariffs. So our view is that, growth is going to slow down in the subsequent quarters from 5.4%, closer to 4% or even lower. But of course, the strength that China has is that it's got a very strong balance sheet, could stimulate its economy. And so we are actually positive on the Chinese equity markets. It's one of our top conviction calls because the valuations are very, very low. China has the means to boost its domestic economy. And if, there's a truce between Trump and China down the road, that's going to be very good for Chinese equity markets. But even putting that aside, I think there's a story for Chinese equities because, valuations are low and the Chinese government has been keeping dry powder. And this is the moment where they have to start using it to boost the domestic economy. And you'll see more headline news coming out of China, I think, in the coming months. And that should augur well for China, especially with U.S. exceptionalism taking a backseat, money flows moving out of the U.S. into other markets, and China is one of the beneficiaries.
All right. Something to watch out for, whether that so-called national team will step into the markets to help support what's going on with market activity. We've been in conversation with Vasu Menon. He's the Managing Director for Investment Strategy at OCBC Bank. Vasu, thanks for your help this morning.
Thank you, Ryan, for having me on the show.
All right, catch up again soon. Stay on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.